welcome everyone. We have an excellent lineup of speakers. But before I introduce them, I'll just give you a bit of context on the discussion. We're looking broadly at sustainable societies. And as I said earlier, we've broken them down into some key components. In the sessions before, we looked at consumer behavior, we looked at smart cities. Now we're going to be looking at resource management. Smart cities or sustainable societies, let's start from there, are societies where human habitation is symbiotic with the environment, societies where resources work for as many people as possible. Question on how we equip people to capture economic value in a way that works for everyone and in a way that leads to a sustainable society. To have this discussion today, we have an excellent lineup of speakers who I'm excited to introduce now. Abbas Al-Basha is the former deputy governor of the Yemeni Central Bank. Thanks for joining us, Abbas. Obong Idiong is the CEO of Africa Prudential. Thanks for joining us, Obong. And Thomas Höhne-Sparborth leads Lombard Odier Asset Management's research in sustainability. Thank you all for making the time to join this discussion. We're having this discussion on the fintech revolution in the context of sustainable societies. And so I think a fair starting point is to appreciate what sustainable societies means to each of you. I'll start with you, Abbas. What is a sustainable society to you?
Hi everyone, do you hear me? Okay.
Yes, we can.
First of all, I'd like to thank you and everyone else for being in this panel, and thank you for having me on such a distinguished discussion. For me, sustainable societies are societies which are able to adapt and cope with the ongoing social, cultural, and technological changes, and be able to prosper and grow within such change. This is in a nutshell.
We'll go on to you, Obong. What's your understanding of what a sustainable society is?
Thank you very much, Ugo, and I also want to commend the organizers of this event, and I think it's a very interesting topic. Well, for me, I think sustainable societies would be depicting societies that grow, optimally to meet the current needs of today. Societies, I want to relate it to the topic of the fintech. I think the concept revolution is actually it actually tracks that broad-based digitization is an effective measure to ignite and sustain economic growth. So I see them coming together in terms of that fintech and bringing it with the sustainable societies in terms of prosperity, in terms of growth, in terms of future growth, which is what it's unsustainable economic growth, which is what I feel is about.
To you, Thomas, what's your understanding on this broad theme that we're framing this discussion in?
Sure. First of all, thank you for having me and for the question as well. To us, a sustainable society must really be quite all-encompassing in the different aspects of sustainability. We believe that the economy that we're transitioning towards is one that has to be circular, of course. One has to be lean, question very seriously the patterns of consumption, must be inclusive on the social side, and of course it must also be clean. Those four aspects we call here the click economy. And we believe that to get to that kind of economy, digitalization, digital technologies perform a very important enabling role, providing many of the technologies that allow us to bring about some of these sustainable societies. And I think fintech is an excellent example of the kind of technology that is indeed being enabled by some of these digital trends and helping us move towards that click economy, as we call it.
Thanks, Thomas. That's an interesting an interesting term, I guess, to use to describe it, the click economy. And we'll touch on that and all the different points that you've mentioned as we go into the discussion. I mean, we're all aware that the rate of technological advancement is exponential. And we've seen how well the big name tech companies performed throughout this year. Looking towards a sustainable future, how can we take advantage of advancements in technology to improve finance and to empower communities for more sustainable resource management? I'll start with you, Obong. How do you think we can, take advantage of advancements in technology in a fintech context?
I think again, I think I'll be speaking from a perspective of Africa. For Africa to adequately take advantage of the advancement to drive increased financial inclusion on the continent, I think that there will have to be a role for the government, the regulatory agencies, and the fintech players. We see how what an advent of mobile money has done in Africa. It hasn't only just improved financial inclusion or allowed for financial inclusion, but has also created and opened a whole new ecosystem in terms of e-commerce, in terms of payments, and in terms of other financial services. So we think that in taking advantage, of course, there has to be that role to be played by the government in terms of bringing up the necessary adequate infrastructure, and also enabling environment for some of these companies to thrive. You also look at the regulatory authorities. I'm talking about broadband penetration. We see how, if you look at broadband penetration, there are studies that have shown a direct correlation with broadband penetration and GDP growth. So I think it's very, very necessary to take that advantage. If you also look at areas of the regulatory, the regulators, so to speak, things like in terms of promoting things like sandboxes and adequately bringing up a lot of solutions for some of these fintech and entrepreneurs to live and thrive with. I think that's also something that is very, very key. Even just having innovation desk where you can call and have all what you need at your fingertips, that really promotes and encourages some of these entrepreneurs who are driving this fintech revolution around. We also see, again, for Africa, from an African perspective, one of the very important, and it's important to note that, like a place like in Nigeria, by end of this year, we'll have about 50%, 80% of the population, 25 years and below, a large percentage of the population. And if you look at digital things like digital ID, which is very, very necessary, is happening at several aspects, but we need to do more in terms of that identity management, of course, credit infrastructure, and it's gone beyond just the normal commercial type credit that we're used to, where we see we've gone beyond that, where you now see a lot of social interactions on different kinds of using data to form and provide access for credits. Of course, digital infrastructure, and again, a talent pipeline, which is also very, very important in terms of are we looking at adding these curriculums, technology curriculums within schools, within the educational systems, even the informal sector. How are we growing and developing and creating these massive networks of educated people, or people that are ready to take advantage of this technology era and digital economy. So I think these are the things that would be very important and sustainable for us as a continent in Africa.
Thank you, Obong. Quite a few insightful points that you've mentioned there that I'd like us to take on further in the discussion. Abbas, for you, how would you define or how would you see sort of taking advantage of advancements in technology?
Well, as Mr. Obong touched upon many important aspects of the ongoing development and how our regions are coping with such technologies in terms of feasibility and in terms of embracing such technologies. From my side, I'll be speaking about the Middle East and North African region, which the Arab countries, you will see that there are a lot of variations in the scope of development in terms of the infrastructure, in terms of the broadband, in terms of its quality and its penetration. So it's not a unified place that we can have a clear idea on how it's operating. But if I would say, from at least my perspective in dealing with the regional banks and regulators, we can speak about two aspects of fintech. You have on the one hand the group of applications and technologies which enhance the domestic financial transactions. So I was saying that we can categorize fintech, from my perspective, into two groups. So you have the first group, which in essence enhances the domestic financial transactions in terms of payment. The first category is the fintechs enabling the domestic financial transactions and enhancing the ability of people to transact domestically in terms of payments, and in terms of enhancing outreach, especially that in most countries you have people scattered across a large geographical area, with most of such population being unbanked because they don't deal with banks for many historic and infrastructural reasons. And then you have the other category of fintech technologies which enable cross-border payments, and this is also a very important aspect in terms of transacting, whether it's for the purpose of transferring money between different institutions and individuals, or whether you are speaking about online purchases of various products and services. And for this aspect comes the regulatory element with a very important pillar, which is the AML/CFT, the anti-money laundering and the counter-terrorism financing, and it's all built on the concept of KYC. So for financial institutions such as banks and others who are offering such services, this is a very important element for a central bank or a regulatory authority to offer its acceptance of endorsing and accepting of such technology to be operating or operational in the country. As you would see in the Middle East region, for example, they can easily block the usage or the activity of currencies, for example, or other financial service providers like Revolut, for example. And this, in essence, has a regulatory aspect in terms of the ability of such regulatory institutions in enforcing their monitoring and being in line with the international guidelines of AML and CFT. So you have a lot of responsibility on such regulatory institutions. You have many other organizations which are dealing with the scope, for example, the financial intelligence units at each country, and how the banks are sharing such information. I think that the regulatory environment plays a very important role, at least in the Middle East, in allowing for the advancement of such technologies in one hand, and in terms of accepting the operation of such technologies in this region.
Thank you very much, Abbas. Just a quick summary there. You talked about the regulatory environment and the role that this plays in helping us to really take advantage of advancements in technology. Just a quick technical recommendation: it might help if you disconnect and reconnect your headphones, just to clear up the sound, Abbas. Now to Thomas, please, what's your take on how we can take advantage of advancements in some of these technologies? I mean, there's a broad range of technologies, that are improving processes, improving the financial products that people have access to. I mean, Obong talked about mobile money. Abbas talked a bit about some of the regulatory side technologies and anti-money laundering regulations. From your perspective, what are some of the ways that we can take advantage of these advancements?
We believe technology and innovation are really a driving trend behind the move towards greater financial inclusion. Technology is bringing new products. It's bringing increased efficiency. It's lowering costs. It's lowering barriers to entry. both at an individual level, making it much cheaper for individuals to actually have access to financial services, but also at a company level. We see new entrants, disruptive market players entering the market, being able to launch very low-cost business models, really challenging some of the incumbent big bank players that are today in the market. And we see that this is really happening at scale now. Back in 2011, only about half of all adults globally had access to some sort of bank account. Now we are up to just around 70% according to the World Bank. That still leaves around 1.7 billion adults today who do not have access to financial services, which is a huge figure, but we have narrowed that gap by some hundreds of millions of people in the last few years, largely due to fintech. And of those 1.7 billion people that still do not have access, 2/3 of them do have access to a phone. And as we roll out more of these fintech services leveraging smartphones and other kind of low-cost technologies, access to simply a smartphone may be sufficient to give you access to financial services. So really the availability of these low-cost technologies, as simple as a smartphone, is really the driving force, we think, opening up financial services to large numbers of people that haven't had access to that before.
Thanks, Thomas. That's an excellent segue into the next question that I'm thinking of. But before that, I noticed that the common thread in all of your responses was the ecosystem, ensuring that there's an enabling ecosystem for these technologies to thrive. And this ecosystem includes quite a few different things, not just the technology itself, but the platforms that it runs on, the mobile devices, the broadband network, the regulations. So keeping all of these different components in mind, I have a question for you, Obong. There are many different payment platforms sweeping through Africa, and they're making it possible for millions of people to meet their needs on a daily basis. Of course, they still have a long way to go, but it's exciting to see where they are at the moment. What are some of the underlying technologies that are facilitating this revolution or this fintech revolution on the continent?
Ugo, that's for me, right? Because you broke for a second. I guess that's for me.
Yeah. Yes, that's for you, Obong.
Okay, thank you.
Would you like me to repeat the question?
Oh, okay, because I lost you for a minute.
Yes.
Okay, yeah. So the underlying technologies, I think that again, as Thomas said, technology has done a lot to catalyze all these large changes and possibilities we're seeing today. I think if you look at the platforms across Africa, I think one of the things you would know is, the computing capacity right now is huge, again, because of cloud technology. And I think that has also driven a lot of some of these fintech advancements. In terms of the cloud technologies, you look at first of all, the computing power. Second of all, the unlimited, storage spaces that you have really helped. One of the things you see again is from the fintech players, which I want to just limit this to, is a lot of API connections, application program interface. Where you don't have to build anything. A lot of these things are plugins to databases, plugins to already existing solutions. And this all has also allowed for some of these platforms to thrive. You hear where even within regulation now, you see, like in Nigeria, the central bank, giving and allowing for plugins, the payment services, the telcos, all releasing these APIs to allow some of these businesses plug in. We cannot also overlook the role that big data has played, and also advanced analytics. Big data, advanced analytics, artificial intelligence too. And what this has done is, recall, I earlier talked about the level of the millennials in the space, especially the high high rate of millennials in Africa. And then you look at, they're used to doing things and having things in a certain way. And so what these intelligent tools have done on machine learning is allow them to personalize some of these services, which provides for a better customer experience. And of course, that would now normally lead to conversions and adoptions. So I feel, these are part of the things. And it's also important because also in technology, you want to, build or adapt technology that would fit a certain environment or a certain demography. And so for here, you see, because the level of broadband penetration is still not as high as it should be. It's growing exponentially year on year, but it's still not as high as it should be. So if you look at the African market, it's also very important that it's not everybody that would be able to afford a smartphone. And so it's also important that some of these fintech companies will also look at other alternatives of having those mobile and reaching those even with the mobile options. And we have something we call USSD, which is unstructured supplementary service data, USSD. And there's a lot of fintech play within that. So I think that some of these things, of course, with blockchain, some of these technology advancement and platforms have allowed for it to thrive, for it to thrive. Yeah.
Thank you, Obong. It's interesting that you mentioned the central bank because, of course, there's a broad spectrum of fintech solutions and a broad spectrum of digital currencies, for example. But what we saw over the past 5 to 10 years is an increase in central bank appetite to engage in some of these innovations. And while you didn't mention, or while the Nigerian example that you just gave wasn't specific to a cryptocurrency, it's just interesting to point out that the Bank of International Settlements Innovation Hub and the Swiss Central Bank or the Swiss National Bank have actually been working with an organization called SIX on a digital currency or cryptocurrency proof of concept and pilots that they're looking at rolling out very, very shortly. So there's a growing appetite from really large institutions, really large central banks, national banks, to engage in some of these solutions. You started talking about it already, Obong, but I'll ask you, just to build on it a bit more. Why are some of these technologies working? I mean, what do you think is spurring uptake from the individual perspective? So we know, or I would say we can see why companies might want to adopt fintech solutions or want to invest in these, but what are you seeing is spurring uptake from the individual perspective?
I think that the fact that, so we talk about financial inclusion, right? And the fact that we have some individuals not consumers today does not mean that they do not want to be consumers tomorrow, right? And now, and so what it takes is, and you talked about sustainability, right? And what it takes is, how are you going to convert those non-consumers to consumers today, right? And so if you look at, and it's not one cap fits all, right? So what is being provided, let's say in an urban area or in the Western countries, right? There might be that need, in some of maybe the rural areas, in some rural areas in Africa. But how are you now bringing those services to them now matters, right? You need to, the services need to be tailored to meet their own needs. We're talking about the convenience, we're talking about the cost, we're talking about areas where electricity might not be widely available, areas where the rate of earning might be very, very low. And so because now what has happened is that fintech has brought some of these things in and has also now brought them to them in the way and manner that they are easily adoptable. They are now consumers of those products and services, right? So these needs are always there. They've always been there. But because they haven't been brought and articulated in a way and manner that would work for them, that's why there hasn't been, and there wasn't an adoption. But what we see now is that it's changing, and we're now seeing these needs being met being met in a different way, in a way that would work for them. And that's why we see a lot of this adoption, especially from those that were not normally within this ecosystem of consumers. You know, technology has now broken them down and has now brought it to meet that specific need that they have within the cost that they have and within the confines or challenges that they have. And that's why we continue to see adoption. I think that, and personally, I think that as we bring more people, as we bring in more consumers, so tomorrow we talk about today at the bottom of the pyramid, right? The fact that they're at the bottom of the pyramid doesn't mean that they do not also need to access some of those or be consumers of some of those products and services, but it's breaking it down to the way and manner that would work for them. I think that the more fintech companies continue to do that, the more prosperous they will be, because they're opening new markets, you know, and bringing in new, we talked about sustainability, bringing in new prosperity and aim for future growth and more sustainability. That's why I think there's a lot of adoption now.
Thanks, Abba. That's an excellent point, because, you know, you're opening up. You talked about the fact that 80% of the population in Nigeria is now about the age of 25. It's, you know, you're opening up a whole new market, and thinking about sustainable societies in the broader context, there's also the opportunity to influence how these people spend their money, and how they spend it positively towards, you know, making the right decisions for the environment, making the right decisions with resource consumption and all of that. I think it would be interesting at another point to get you guys to talk with my colleagues who spoke on the session about consumer behavior. It would be interesting to see how, you know, on one hand you have the technology, on the other hand you have sort of the thinking, and how that comes together. Now, going on to,
it's actually 50%,
you know,
not 80%. I'm so sorry. 50% of the population in Nigeria is by 2020 below 25 years. Thank you.
Okay, thank you. And that's still quite a significant number, considering that Nigeria's population is 200 million. Thanks for the correction. Now, moving on to looking at this a bit from a public sector perspective, national financial systems can't make the transition overnight. They can't transition to, you know, full digitization at the snap of a finger, and they also can't achieve full social or economic inclusion overnight. But there are steps that they can take to start this transition and establish the required basic infrastructure. From your experience with the Yemeni Central Bank, Abbas, what are some of the steps that national institutions can take towards, you know, this digitization and better inclusion?
One of the most important elements that regulatory institutions have to focus in order to create an environment which adopts and embraces fintech and such technologies is to create the regulatory and legal environment which would allow the activities of fintech not only to flourish but also to bring about new technologies. The more open the regulatory environment, the more the economy and the people living in different jurisdictions can benefit from all the aspects that you mentioned about the benefits of dealing with fintech. Not only with the regulatory aspect, but also with the infrastructure. So you need to make sure that the underlying financial infrastructure is available for such institutions to carry on their operations in an environment which is also legally and regulatory prudent in terms of the national switch, the payment system, and many other elements. What's also another important point to mention is that many of the central banks are now experimenting with the central bank digital currency, which is also one of the hot topics discussed at the BIS. And to my knowledge, also, one of the leading central banks in the region, so for example, in Saudi Arabia and in the UAE, they are already experimenting with their own potential digital currency that would be issued by such a regulatory institution coexist with fiat money, which is printed and minted under the state. And one of the important experiments in this domain is the experiment which was carried out between the Central Bank of Canada and Singapore, where each country created their own blockchain environment and then their own digital currency, and they made a cross-border transaction to experiment how the performance of the risks involved in such potential environment. So what I'm saying is that central banks, yes, they are relatively slow in coping with the fast advancements in the fintech industry. Nonetheless, they are still interested. They are still, experimenting and looking into the subject matter with high interest. For example, if we speak about Triple, it's now adopted across many institutions in terms of the clearing and settlement of cross-border payments, and slowly, take the place and importance of SWIFT as being now the major dominant financial infrastructure for the international transactions. So all of this is just to underlie the issue of the laws and regulations, which are not easy to push forward and align it with the same speed of development in the fintech sector. That's why you would see variations across different countries. And this will depend on how rapid and how flexible the regulatory and legal environment in order to catch up with these developments.
Thanks for that, Abbas. And that flows actually into the next question that I'm thinking about, and it really is how can so we understand that there's a regulatory and legal environment that needs to be established, and that there are challenges that exist to establishing this environment as quickly as the innovations are evolving. But how can you, at least from your perspective, how can public sector decision makers, how can the leaders of these banks think about getting past some of these hurdles? Is this more, are there decisions that they can take at an institutional level, or do you think this is really something that needs to happen at the policy and legislative level?
Level, where such decisions will not be issued by the central bank alone, per se. Other institutions will have to be involved in the government, to take upon this issue and discuss it at a further level. What's also more important is the regional and the country level discussions, which also encourages. For example, when we used to attend the Arab Monetary Fund meetings, the Arab Monetary Fund is like a regional IMF for the Arab countries. We have these annual meetings where the governors of the region central bankers meet, and by seeing how different countries are coping and developing this issue, it gives you also the momentum, the courage to also do this and go within the lines of the countries which are neighboring. So keep the momentum up. The role that the BIS is leading now, it's quite impressive. The amount of working papers and surveys that they have issued when it comes to the issue of how central banks can adopt a digital currency, it's immense, and it's very interesting. And you can see that it's rippling down across the various other international institutions like the IMF, like the regional also institutions like the AMF, which we discussed. And from that point, they can go back and reflect this domestically at the country level, and then it will have to be at the national level, yes, and it will have to be at the government level, and also involve some of the parliamentarians who might have no idea what we're talking about. Especially, the parliament, when you want to amend a certain article, a certain law, you would have to also do some financial literacy and to explain to such legislators what is it that you are trying to develop or adopt. Because usually there is a gap between the legislative body, which is the parliament, and then the government and the regulatory institutions. So it has to be a collaborative
approach. Thank you very much for that, and I agree. You know, it's not a decision that any one institution can take. It's something that has to be coordinated at all levels of government. So now we've seen two sorts of ecosystems, I guess. There's the ecosystem for the technology, and then there's the ecosystem for the adoption of the technology, which, you know, both signify that there's really a broad range of stakeholders that need to be engaged, that need to be on board to make the fintech revolution a success for everyone. Thomas, it would be interesting to hear from you, you know, how Lombard Odier is thinking about, or at least, yeah, is thinking about sustainability in the context of fintech solutions. You know, what sort of solutions are you investing in? What challenges are you seeing? What role do you see the private sector playing in
Sure, no, that's an
facilitating
excellent question, and one we
ecosystem?
spent quite a lot of time thinking about, of course. We have a dedicated fintech strategy where we specifically seek out investable opportunities in this space. One of the things we try to do there is distinguish short-term hypes from longer-term trends. These trends, we believe, are driven by, of course, demographic change, which we already spoke about. The example of Nigeria is an excellent example there. Technology, which we've touched on as well, and of course the question of inequality, where policy pressure comes into play as well. Now, when we put all of those forces together, what we're really seeing are, I would say, 5 key trends that for us define the opportunity from an investor perspective in fintech. First of all, we see this unstoppable trend towards a cashless society. It is a rapid trend, but of course still one that needs to be managed carefully, because there's also downsides behind implementing that transition too quickly. We see a second trend towards greater financial inclusion, which we spoke about already. That to investors is also exciting because it opens up so many new potential markets for new products, for new services. We're seeing opportunities in the shakeup of some existing markets. I mentioned that technology lowers the costs for some of these services, so it allows new firms to enter with new, disruptive, often much more efficient, much cheaper business models, which also offers benefits to consumers. That in turn gives rise to entirely new business models, exciting companies that are combining entirely different kinds of products and services, not necessarily in the financial space, but maybe coming from consumer electronics, including smartphones, again, coming back to the example, now entering into this space. Companies providing really a one-stop shop of products and services, including these days financial services. And perhaps the final trend that we're seeing there is the downside of digitalization, cybersecurity. Of course, as we move to a more digital world, the downside risk is that we expose ourselves more to these kind of security risks, which is why, as we've built up this strategy, cybersecurity is actually quite a core component of some of the opportunities and technologies we believe we need to invest in to safeguard that transition. So in all of that, understanding those trends that we believe are redefining this space, what we look for are opportunities, companies that are driving that transition forward, that are offering new solutions, either that's new payment technologies, infrastructure, supporting services like cybersecurity, financial management. So through that, we've identified numerous companies across that space that we believe are actively contributing and lowering costs, barriers of entry, and making these services more available to a much larger number of people.
Thank you for that. It's an very exciting to see the list of trends. And I think the point that you mentioned, identifying what is a concrete, actual long-term trend and what's not just hype, is probably one of the biggest steps that anyone should take, in thinking about technology and investing in solutions for the future. I'm sure we can come up with numerous examples of technologies that, you know, the world quite hasn't decided whether they're hype or whether they're actual trends. But thank you for sharing these insights. You talked about financial inclusion, and you know, we've talked about this a bit already, but this is really a key pillar of community growth, because with the right tools, the efficiency and effectiveness of national resource planning and allocation can be improved. And you know, resource planning and allocation is really one of the big challenges that the developing world is facing. At the same time, individual access to goods and services broadened beyond is broadening the access to markets beyond their immediate environment. Today, depending on where you are in the world, there's a long list of financial instruments and tools that you can use to meet your daily needs. I mean, an example, as of September this year, there were an estimated 15,000 restaurants that accepted Bitcoin payments on the Just Eat platform. And I know Just Eat is not, you know, in countries all over the world, but it's in quite a few places. And this is on the Just Eat platform in France alone. So I think, you know, that trend or that particular instance shows how, you know, these solutions are really expanding at a great pace. Not expanding at the same pace around the world, but you know, expanding nonetheless. And there's several other big names that have tried out digital solutions. You know, big brands like Burger King and KFC, who have quite a broad network of restaurants around the world. So I have a question now for you, Abbas. How do you see digital currencies further evolving as a store of value? And it would be interesting to actually, you know, hear from all of you what you think about this. How do you see digital currencies evolving as a store of value?
I think, you know, it has a mixed perspectives when you speak about cyber, digital currencies like Bitcoin and others, and now you have thousands of them. You know, what's worrying for regulatory institutions is the opaqueness, is the inability to decipher who's dealing and who's holding and who's transacting with who. The DLTS is very impressive technology in terms of its performance, efficiency, and so on and so forth. But when you try to align this with the AML CFT requirements, with the KYC requirements, it's quite challenging. Let alone when you speak about hold of value, we do not know the dynamics of the supply and demand of such currencies. You know, you don't have a central authority that you can go back to. I know that this is the essence of cryptocurrency and the DLTS is that it's distributed technology, that you don't have a central owner. Nonetheless, you can see why most of the financial institutions are gravitating towards Ripple more than Stellar, although they have the same technology. But Ripple is an institution which they can recognize and deal with. So here you can see that we are now operating, I think, on the very thin line of whether to accept or not, and the definitions of what constitutes a currency or a digital currency. So you can have something in between. This is the essence of the BIS papers. You can have a currency which have the aspects of being digital and being performing on a DLTS, but at the same time it's decentralized or decentralized in a way that you can actually have some knowledge of the transactions that's taking place. Because as you know, for a regulatory institution, it's a nightmare not to have any knowledge of people transacting and the purposes of the transfers of funds and so on.
Thank you. And you know, that discussion on centralization versus decentralization is really one of the core, I would say, arguments of cryptocurrencies, because on one hand, many cryptocurrencies were created with decentralization in mind, for many reasons. On the other hand, with a little centralization, you can potentially expand the use cases of some of these instruments. Would be interesting to hear from you, Obong. How do you see these evolving as a store of value?
It's like Abbas said, it's a lot of mixed reactions because of the opaqueness. I think that of course, as a store of value, it is increasing. The uptake is increasing. We see that across the world, and the acceptance is also going up. But it's to a lot of individuals, including myself, is still very unclear. Again, due to and remember that there's a proliferation of different types of digital currencies. We're not sure how the value is increased. There's so many things within that. And if you look at the broader financial services sector, there's a lot that in terms of KYCs and everything. So you see you have to solve why there are a lot of these cyber attacks increasing. You hear a lot of ransomware, where you now pay, and a lot of hackers are there now because you now have to pay by digital currency. Like Abbas rightly mentioned, there's no KYC, you can't track, you don't know who it is at the other side of the table. But that said, and also like a lot of other things. That said, I think it's here to stay. I think it's also something that is in terms of the future. There's a clear future, like you rightly said, Ugo. There's a clear future space for it. One of the things the central bank is doing here is set up a committee to look at the roadmap for these cryptocurrencies. I don't think that also in Nigeria, I think in the last from 2015 to date, Bitcoin, the Bitcoin has been the second largest trade. The Bitcoin has traded here, the second largest in the world, the first being in the US. So it's technology. I mean, something that is here to stay, something that would also ease in terms of if you look at the blockchain technology and that ease of transactions and the rest. But I think again, we have to look at very, very strong frameworks. Things have evolved over the years. Even today, the payment system, the financial system, as we saw it, has evolved over the years due to different things. We feel, but of course, we have to move quickly in terms of understanding and in terms of creating safety nets around it. But it's one thing that would encourage all governments to look at and see how best it can be applied within each geography. But I think it's here to stay, but there still needs to be a lot of clarity, and that's why a lot of investors haven't really, or a lot of individuals haven't really jumped in to it yet. But I think adoption levels would increase once all this clarity comes and more frameworks are addressed around it. Yeah.
I'm sorry, Ugo, if you just allow me ask intervention. For example, for the store of value,
yes, please.
Fluctuation is a good business for investment, but for store of value, it's not a good case. For example, if you look at Bitcoin, several years ago it went to 20,000. Last year, around February to March, it went down to 3,500. Today, it's again at 16,000, about 16,000 Swiss francs. As an investment, yes, I might consider it, but as a store of value, such huge volatility in price would make you skeptical in terms of considering as that's why you have now the stable coins, or the coins which are directly linked with certain currencies like the dollar and so on.
Thank you for that. Thomas, would
Sure,
you like to add anything?
I think I agree with the previous speakers, and speaking from a European perspective, I think we definitely believe that this is going to happen. The European Central Bank is an excellent example. Christine Lagarde, when she was still at the IMF, did a lot of studies on this topic, and of course now at the ECB we're seeing a lot of noise coming on this issue. There's a major task force on a digital euro. We haven't heard the specifics of it yet, but I'm sure we will do soon. I think it's very likely that this is going to happen. There's strong advantages to it. The ability to store money outside of the central banking system, in theory, potentially could be safer. lots of advantages to it. But on the downside, of course, we must also realize that a lot of the financial system is about trust. It's about confidence. And I do think that the majority of people speaking about cryptocurrencies have little understanding of how it actually works and what it's actually like. And of course, that is something that needs to be very carefully managed if this is rolled out at scale, especially among the larger public, to make sure we maintain that degree of transparency and trust in the system.
Yes, and getting to scale. I mean, looking at the way some of these currencies are structured, getting to scale. There's still a lot of research and still a lot of work that needs to go into actually getting past some of those hurdles, like Bitcoin's proof of work or some of the other consensus mechanisms that different currencies have. It's been a really exciting discussion, but we're getting to the end of our time. I would like to hear from each of you one or a particular technology or solution that you're working on at the moment. I think this would also be interesting for our audience, because as you know, one of the key objectives of the Impact 17 Step into a Better World initiative is to foster partnerships that actually get us towards, achieving some of the goals, some of the SDGs, but then also some of the sustainability goals that the audience, the participants, the different partners here have in mind. So it would be interesting to hear from you on a technology or a solution that you're each working on. Shall we start with you, Abbas?
Ideas that I've been working for the last year, it's on developing a next generation blockchain-based ATMs that would allow cross-border person-to-person remittance. Given all the frictions that we still have today in such a case, you as a person, you want to send money to another part of the world. You see, we can find that such machines might play a very important role, especially that they will be customized. They will not look like any of the ATMs that you see today. They will have terminals that would allow perfect KYC in terms of the parameters of the client and the APIs that it's connected, so that it can make an instant identification of the client vis-a-vis the different designation lists and the blacklists issued by international organizations and also national organizations. And then it would allow the person to pay in cash, in debit card, or from a crypto wallet, and the same wise for the receiver, who shall receive through such outlets. It's providing much flexibility, and it's at the same time in line with the regulatory requirements of KYC enabled CFT. If anyone is interested, I'll be happy to discuss it further with anyone who might be interested in this video.
Thank you, Abbas. Obong, would you like to share a solution that you're currently working on?
Ugo. At Africa Prudential, we're working on a few, but you're limited to one, so I'll just speak about one that's very close to my heart, and that's a cooperative platform. One of the things when we started building this platform to automate the cooperatives' very manual processes. But as we moved further, we found that there was a lot we needed to do in terms of making these cooperatives very prosperous and creating growth for them and sustainability in their ability. And so we really pivoted. And one of the things the solution has, of course, there's this plugin for loans and savings and the like. But we're now doing a lot in terms of, in addition to a lot of advocacy, a lot where there are a lot of intervention funds out there. A lot of the cooperatives are in the rural areas, the markets, and they're the farmers, the fishermen and the like. And so one of the things we did was, how do we connect all these intervention funds? Is it palliatives? Is it funding? Is it grants? How do we make them, prepared and ready to be able to access that? We have a lot of them here, but the access rate is very, very low. So we put them on the platform, and some bring a lot of a bit of documentation, identity management, even tracking what they do, tracking their produce, and how to do, just giving them some level of a digital identity, and also tracking their businesses and all that. And what that happens is that it's going to open ways for them to access markets. There's also some e-commerce type platform there, so they now don't have to go through the middleman. It's also going to make them access that. It's also going to make them do a few things in terms of the growth, and also in terms and going out there to the larger market. Also financial inclusion. There's also that one thing that we're doing to create that platform across. And when we started, we put a lot. There was a cost to it, but we're now looking at models so that we can actually send it out for free to see how we can further grow these cooperatives within Africa. Thank you.
Thank you very much, Obong. And
sure. So
as
as investors and asset managers, our role is really to try and mobilize capital to these new technologies where we see them fit. Now, we are especially pioneering in the field of sustainable finance. That is today the fastest growing type of investment. Much of that today, we believe, is still very much focused on kind of a checkboxing exercise of ESG practices, seeing which kind of companies have good policies in place, etc. We're trying to look instead at much more forward-looking metrics, trying to see which business models we actually need to move ahead to these more sustainable societies that we've been talking about. What kind of companies, what kind of products, and what kind of services will be needed. It is that type of investing, that more forward-looking investing, that we think we will be seeing much more of, and Fintech is, I think, an excellent example there. But what is needed there, and I think that's the solution that we try to provide, is to try and navigate that large universe of potential opportunities to identify those companies that can really achieve the best impact and are best positioned also from an investor perspective to take advantage of some of those emerging opportunities.
Thank you, Thomas, and thank you, Abbas. Thank you, Obong. It's been really exciting speaking to all of you. We've come to the end of the session today, and I think our call to action from the session is really thinking about fintech solutions in an ecosystem, for the solution to operate, but also an ecosystem for the solution to be successful and to be adopted. It's been a pleasure speaking with you all. Many thanks. I'm sure we'll be in touch again to follow up on some of the initiatives that have been discussed today. And I can see that in the comments, some colleagues had already reached out with some ideas. So we'll follow up with you afterwards on that. And of course, to our audience, thank you all for joining us.
Thank you.
Thank you.
Have a lovely afternoon.
Thank you very much.